This Week in Startups is brought to you by Weebly. Whether you're looking to create a side hustle or your dream job, Weebly can help you get there. Visit Weebly.com/twist for 15% off your first purchase. And Fin. Fin takes care of administrative tasks so you can make better use of your time and be more productive. Try Fin for free by going to fin.com/twist.
Every day at our events, we start with money, people who can write checks. And so we did a lot of research on who's actually capable of writing a check and who's an active investor. And it's starting to pick up here. You're starting to see an angel class emerge, and certainly you have some venture capitalists. So let me just start the day by, once again, thanking Destination New South Wales and the New South Wales Government and Business Events Sydney. They gave us the ability to give away 98% of the tickets for free. Who's a founder who got a free ticket? Raise your hand. Keep your hand up if you would have paid for a ticket instead of working on your startup. So about half of you wouldn't have showed up, so that's good. Or you're being super generous. What we found is when we give those free tickets, people come and we break even on these events. The secret for how we're able to do these and why we do them is we invest in probably 3 or 4 of the companies that come out of each event that we meet. So hopefully we find 3 or 4 investments a year here and build that bridge between our 2 great cities. Okay, let me bring up our first group of speakers. Ben Narasin is a venture capitalist and formerly an angel investor and one of the best ones in Silicon Valley. He also wears pretty sharp pants. I'm just assuming he's wearing the red ones. I haven't looked. Is it the red ones? Yeah. Oh, there they are. Boom. This is trademark. StonlyBaptiste is the co-founder partner of Urban.us. We've invested in a bunch of companies. Come on up, Stonely. And Samantha Wong is my new friend, Sam, from Blackbird Ventures here in Sydney. And we started sharing deal flow already. Good morning. Okay. So yesterday we talked to angels and syndicates. The venture capital space and writing slightly bigger checks, the 500K checks, the $1 million checks, has become more challenging because there's so many companies? Or is it more enjoyable because there's so many startups to pick from? Ben, when you think about how this has changed, you and I have been investing for over a decade, or you've been over a decade, I've been under a decade slightly. It's changed dramatically in the States, and I even can see it here. There's a lot of people starting. How do you pick who to give those big checks to? And has this become just a deluge of really high quality companies? And how do you, if so, how do you pick?
Well, there's another factor that impacts sort of the challenges of picking and competing, which is the even larger deluge of capital. It's coming in from all sorts of sources. So you have had a meaningful increase in companies, but you've also had a much larger increase in capital. Across the increase in company quantity, you have generally seen an increase in company quality for the ones that get funded and survive, at least to a certain level. So I think the data right now is pretty clear over the last couple of years that there's a lot less true, high quality seed rounds or just seed rounds period being done, but at a lot larger dollars. So this does play into sort of how venture thinks about it. I think venture tends to be, venture has done seed off and on for the last, call it 6 years. Seed preceded venture through a lot of independent players, yourself included, myself included, Floodgate, first round. And then venture thought they were missing out, so they sort of got in the game, but they got in it very amateuristically and threw a $50,000 check into 100 companies and thought that would buy them access. Or Sequoia put money into literally every company in YC thinking that would be the right way to do it. And then they figured out that doesn't work because you don't get access by putting in money, you get in access by putting in time. So they all gave up. Then they came back in. And it's an in-between time right now. I think people have realized, if I just simplify it down, that it's about conviction. It's about companies that you feel excited about at a level that you can commit money and time. And so that does require a really high quality opportunity, people, a big idea, and a huge market if it works. I think you need all of that. And I think you are seeing those opportunities come more often because more people are trying.
Stonely, you've been investing for a couple of years now. And I think your average check size is 500, $1 million?
250.
250. So that puts you in this squarely in the seed fund. You co-lead rounds with me sometimes. So how are you dealing with in America, just the unbelievable number of startups that are approaching us with, call it $10,000 a month to $50,000 a month in revenue. I mean, if we were sitting here 10 years ago, Ben and I would be laughing like, we didn't invest in any companies with money. We'd be giving them the investment to get to $10,000 or $50,000. We feel pretty good about it if they did. Now we're turning those same companies down. How do you deal with that in America?
Well, first of all, the sectors that we focus on, they're still really early for to be transformed by technology. So things like built environment, government. So we still end up working with teams pretty early before they're at 10, 15K a month in revenue. And I think it's maybe 10, 15% of companies that are building very meaningful companies that are going to get to revenue and ramp up pretty quickly because of the size of the markets. But we have to sort of see past the first lift, and it is a big lift for companies like Blockable, for example, to get off the ground and get to revenue.
And how do you make that decision to give money to a founder who doesn't yet have traction? Because that's what all founders want. They want to get money before they have traction. And I perceive that's getting harder and harder. I think you're a bit of a dying breed of a firm.
Right. Well, I mean, we believe in the, I don't know who said it first, but the lines, not dots thesis of investing, which is if you can find enough early proof points of a founder and a team's trajectory. They said they were going to do something, and then they did it, and they not only did it, they did more than they said they were going to do. Then you can start to gain confidence that the things that they're projecting to do, that they'll at least get close, if not knock it out of the park. So it's a lot of looking at, well, what can you build as far as a prototype? What are the early pilot or even pipeline customers you can get conversations going with? What sort of team are you able to recruit? What other investors are you able to galvanize to your cause?
Yeah, and how many meetings or months on average does it seem like you're doing before you write that $250K check?
It really varies. Some of it is based on our own timing and investment cycle, but we've moved as quick as 4 weeks, and we've taken as long as 6 months to realize that we really want to work with someone.
So it is a long game for sure.
Absolutely.
Sam, educate us as to the market you're seeing here in Sydney, given the context of my questions for Ben and Stonely.
Sure, no problem. So when Blackbird got started in 2012,
Right into it.
When Blackbird got started in 2013, 2012, they first started fundraising. There was literally not really any capital left in the venture capital system here. We raised a 30 mil fund then. It was the largest fund of the time. Last year, 1.3 billion was raised in venture capital in Australia alone. So I think that speaks to the quality and quantity of opportunity here. We've certainly seen that in our portfolio. We've invested in about 45 companies now, and they've cumulatively raised 800 million in 5 years, and we only provided 20% of that. So I think that speaks to the opportunity here.
Let's take a moment to thank our friends at Weebly for supporting This Week in Startups. And if you've ever thought about quitting your job and doing your own thing, you're not crazy. In fact, you're like 82 million other Americans who said they'd start their own business if they could. Well, Weebly wants to see more of these people take that leap. They want to see you take that leap and turn your ideas into a successful online business. So, Weebly has made it so easy to get started. First, by making it dead simple to create a great-looking website. But second, and more importantly, by providing tools that help you turn that website into a successful business. Let's say you're an artist and you want to sell your stuff online. Well, with Weebly, you can build an online store that makes your products and your brand look incredible. And you can easily manage your inventory, collect payments, run promotions, and even chat with your visitors live on your site. So when you're ready to grow, Weebly can help you get discovered on search engines and create marketing campaigns and get your return customers, all that important high-level marketing stuff. That's your next step after you figure out commerce, which is the step after you figure out how to build a great website. So here is your call to action. Whether you're looking to create a side hustle or your dream job, Weebly can help you grow and they can help you get your idea out of there. So visit Weebly.com/twist with 2 E's, Weebly.com/twist for 15% off your first purchase. Weebly, more than just a beautiful website. Okay, let's get back to this amazing episode. What's the check size at Blackbird? And to the same question to Stonely is, what's your range of, how quick you've moved to how long it's taken, but to get a yes?
The check size question is a little hard to answer in terms of averages because we like to say there's no check too small. Like we wrote a $150K check the other week because that's all they needed and they just needed to get started and we're really excited about the area. The largest check we've written is 27 million. So I guess our sweet spot though is that seed to Series A stage. So somewhere between a $1 and $3 million check and leading the round. That's what we love to do. And to support the companies for say 1 or 2 rounds here and then introduce them to Silicon Valley investors. That's one of our main kind of value props that we offer founders. In terms of like how long it takes us to make a decision, we love to optimize for a quick no rather than a slow yes, if at all possible. Having all been founders, we're very empathetic about how time is basically the most precious thing you have, and you don't want to kind of drag it out if you can't, if you can avoid it. Sorry. I think the shortest one was maybe a week. We'd known the founders a long time, and we're waiting for them to start their new company, and so it was quite easy to move on that one. Honestly, we wouldn't have had anything to spend more time looking at because they're just getting started. Longest? Well, in a way, Canva was the longest because when we first met them, they just were 2 people an idea and it took them a year to find their CTO. Once they had the CTO in place, that's when we invested. So that was maybe you can consider that a long courtship, maybe.
Yeah, and you have now the most recent unicorn. Has that company changed how people perceive the market here? Because that company is so top of mind in America. A lot of people are using it in their startups, so it's come up a bunch of times. I remember becoming aware of it maybe 2 years ago. Just somebody said, "Oh, just use Canva for that. Just Canva for that." Boom, boom, boom. And I was like, "What is Canva?"
Verb, that's great.
Somebody took it out in the incubator and said, "Here, let me show you. You can make like anything in like seconds."
Look, I think so, but I think the precursor to that was really Atlassian. I think it's really hard to underestimate psychologically the impact of 2 guys, hacking something together out of their, dropping out of uni, maxing out their credit cards to build something, selling it globally around the world from the very beginning, not really taking venture capital until really the late growth stages and listing on the NASDAQ. I think that inspired a whole generation of entrepreneurs and inspired also the institutional capital market here to step in and fund this stuff because the great tragedy I think of maybe the last 10 years is that there have been some really fantastic Australian companies, Atlassian and Varto, Campaign Monitor, but they haven't really been venture capital funds. Well, none of them invested in those companies.
They had to come to the Bay Area to find investors and then come back here to.
Well, there were venture capital funds here. They just missed them. So
how did they miss them? What do you think happened? Were the venture capital firms at that time too cautious? Were they playing on their heels, as we say in America, instead of running down the court? I wasn't around investing at that time, so this is sort of secondhand knowledge. But I think that was part of it, sort of focusing on earlier quick exits, sort of 3 to 5 year exits, rather than holding out for the long term. Investing in founders that maybe weren't doing their life's work or were sort of more MBA founders rather than product centric founders. So that might be some of the reasons. But I guess to answer the first question around Canva, 100%. And I think maybe even draw back to the other question that you proposed around what do you do when there's no revenue? People forget Canva didn't really make meaningful revenue for the first 3 years. They just had the product out, had people loving it, using it, religiously monitored the number of designs created and published by users. And when they saw that they really had something that was working, that was addictive, they launched monetization properly. When you look at the market here, Ben, and you see it starting to bubble up a bit, how do you assess the companies here? Do you believe that the companies here have just as good a shot at changing the world? Are they at an advantage because they're not part of the chaos and distraction of Silicon Valley? Are they at a disadvantage because there's not as much capital here? How would you assess it? I know you've only been on the ground for a week.
So, it's interesting. I think about what I'm seeing in Australia so far not that differently than what I thought about New York 6 years ago, or Canada 3 years ago, or Austin 2 years ago, or any place outside of Silicon Valley, in that there's a bunch of different dynamics that tend to happen. And I'm not from Silicon Valley, I moved there, but I've entirely consumed the Kool-Aid. I'm absolutely convinced that Silicon Valley is Shangri-La for entrepreneurs, and it does draw the best and brightest from around the world to it. It doesn't mean other people don't stay in their home countries and prosper, but they often come looking for relationships or capital. So as an example, when I look at New York, one of the reasons venture didn't spend a lot of time looking at New York until really Foursquare was the point you just made, early exits. There was this cash flow mindset. The investors locally, I spent 13 years in New York, and I still remember when someone said to me, well, how is it on a DCF model? And I was like, what are you talking about? And they said, well, discounted cash flow. I was like, oh my God, I haven't heard that since business school. I don't know. It was just so totally opposite of everything I thought about in Silicon Valley, but it was very much the New York way of thinking. So I can assume that there's a bit of that where you have what I've heard from some entrepreneurs is much less developed ecosystem of capital. So when you have supply of entrepreneurs growing, but demand growing at a slower clip, then that tends to disadvantage the entrepreneurs. The other thing I used to notice a lot in any community, and I assume is true here, the valuations are much better than they are in Silicon Valley, but to people locally, they might think they're extremely high. It could have been a reason that people missed out on opportunities that were growing at a certain pace. I don't think anybody's disadvantaged from being in any location except that, Israel, another country that's done quite well of late with technology, it's another place where until Waze and one or two other companies, they didn't have any billion-dollar outcomes. So venture capitalists thought, it's too small. A bunch of entrepreneurs are going to shoot for a $100 million outcome. It's never going to be material. But then when they saw it start to happen, and it's funny how lemming-like this attitude is. There was a billion-dollar outcome. Therefore, there will be more. Therefore, I should pay attention and send people there, which I find somewhat humorous. But it is true that when you don't have an ecosystem developing in a certain way, it's harder for others to do it. And I think that boils down to sort of peer groups. Who do you have to look to? The thing I was always fascinated by moving from New York to Silicon Valley is in New York, when a young person that might have an entrepreneurial mindset, and I'm interested in how this is developing here, looks around for that person to admire, let's use just purely on a financial basis, they're going to see hedge fund folks and bankers and Wall Street types, and they're going to think, if I want to make a lot of money and have a big house in the Hamptons, that's what I have to do. In Silicon Valley, you look around and you see truly wealthy people. They're 28-year-old startup kids that cashed out for $700 million and are living life large. So seeing that that's possible gives people something to aspire to in a way that they don't get to do and they don't see it as being possible. As part of it, you set your targets that you shoot for, and if what is success to an entrepreneur is a $30 million outcome of which they keep half, it'll be very hard for them to draw certain types of capital. So lastly, I'll say that the one big challenge I can see, and an entrepreneur brought this up, is it's not a particularly large market. So I mentioned Israel only because I found this fascinating company there, and I think it's a huge opportunity, and they just fundamentally don't want to leave Israel. I was like, okay, great, well, good luck building a company of size.
3 or 4 million customers.
Right, and here you've got a larger market, but if you're not willing to, the US isn't always arrogant about its belief in where it stands in the world. I think it would merely argue that the US and China are the two largest economies in the world, and so if you as an entrepreneur want to see your business grow, one would assume it's highly logical you'd want to tap into that environment. Sometimes investors can help you with that.
Stonely, what are your thoughts on what you've seen here since you've gotten here, the companies you've met with? Founders seem any different to you than the ones that you and I deal with every day in the Valley and in America?
No, I think, and that's a good thing, there's just as much enthusiasm and intelligence and creativity here. I'm very encouraged. I think, it really does come down to sort of how big their opportunity space is if they're constrained to Australia, and contrarily, how willing they are to build a business that captures a more global opportunity. So obviously a week is not enough to assess business plans and models, but definitely encouraged by the entrepreneurs I've met so far.
Of your investments, how many are in the Bay Area versus not?
Ballpark, maybe 12 or 15 in the Bay Area out of 45.
Right. So this is something that people, I think, are making an incorrect assumption that venture capitalists and investors, seed investors and funds, are only investing in their backyard. It's actually changed, I think, in the last couple of years. How do you, Sam, convince venture capitalists? You said that was a big part of the value add at Blackbird. How do you approach them and say, hey, we think we got something, you should get involved? And what is the conversation typically like? And has that conversation changed over time since Canva, and since it's not just like an Atlassian, which I think people looked at was like, oh, that's weird, and now it's like, oh, well, now it's a trend, right? And the same exact thing happened in Stockholm, where now there's 9 unicorns, and people are like, oh, well, that's where unicorns are born. You just go to the magical forest, and there's a bunch of them. Just pull one out. How do you bring your little baby unicorns to Silicon Valley and present them?
Well, the thing about the companies that we back is that we have to see that they're global from day one. They have customers all around the world from the very beginning, and their customers don't even know or care that they're in Australia. So that usually necessitates actually either a sales and marketing office or the founders going back and forth from Silicon Valley and Australia very often. We also go over very often, and so we're maintaining our relationships with the people we've co-invested in the past and always looking to make more. Index have been supporters of our portfolio. Felicis is another one. Lux, DFJ. And so we're keeping on their radar and speaking to them about, okay, what's interesting to you? Well, this is what we find interesting, and this company is doing really well. Just kind of the investor update kind of format. And then when they're ready to raise that round, the sort of Series A, B stage round, those investors sort of have already have a really good idea of who they are and what they've been doing and the progress. Perhaps they've already even met them. So it's actually quite an organic transition. It's pretty hard to turn up, get off the Qantas flight and turn up stone cold into, an Andreessen or an Excel's office and say, take me seriously, I promise everything I say in this, next half an hour is true, etc. So we are part of, increasing their believability when when the time is right.
Okay, let's talk about Fin. I've been using Fin, and it is amazing. There are not enough hours in the day to get all your tasks done. And what are your options? You can continue to try to get things done by yourself, or you can change the way you're doing them, or you can try hiring another assistant. That's where we discovered Fin here at This Week in Startups. It takes care of all of our administrative tasks, and this lets us be more productive and focus on the things that matter. So, things that Fin can do, Fin can do, schedule a call or meeting, make travel arrangements, you know how long that takes, do online shopping or buying, book your doctor's appointment, maybe even your dentist appointment. I just realized I need Fin to do that for me. I forgot about my dental appointment. And you can help find service professionals if you need a handy person or a plumber. And the results are clear. You will save time by having Fin perform all these administrative tasks. And it's much cheaper than hiring a personal assistant or an administrator. You will be more productive and you will get more done. Like the best assistants, Fin knows your preferences. They remember the people you interact with, and they integrate with your email and calendar. Fin can make calls, send emails on your behalf, pay bills, remember important dates, and automatically get things done for you. It has saved us a ton of time. I'm loving using it. Fin is always available on demand, and you pay for only what you use. So you don't have any fear about, oh my God, am I wasting hours? Nope, you pay as you go. So go ahead and try Fin, and you will love it as much as I do, I am sure. Listeners to my show, you can try Fin for free. Think about that. Go to fin.com/twist, fin.com/twist. Go to fin.com/twist, and you can try Fin for free. Stop wasting your time on all these administrative tasks. Just outsource them to Fin. Get them all done nice and quick, easy peasy, and focus on what you do best. Okay, let's get back to this amazing episode. Just a quick question. Do you feel they hold founders here to a higher standard than ones in their backyard? Do they make them perform and have more performance in order to make an investment in a market 14 hours away?
I don't think that's necessarily true, but I think they're often surprised. Because it is a relatively more capital constrained environment here. I think there is a slight sense in Silicon Valley that you couldn't possibly produce great engineers anywhere else. You couldn't possibly, you know what I mean? But you actually can, and in fact, there's a real asset to having at least your product and engineering here. We have great universities, great quality people. The government will give you almost 50 cents in the dollar back for everything you spend on hiring engineers. They'll stick around for more than a year. They cost about a third of what a Silicon Valley engineer costs. So,
And they can live in one of the 4 of the top 10 best cities voted to live in.
are you sponsored by New South Wales?
No, I mean, actually, I can't say the other 3 names of those cities because they're not New South Wales, but I was just like looking at the list and I was like, my God, like San Francisco wouldn't be in the top 400 cities, best cities to live. It's a horrible place to live. Cost of living, crime, et cetera, taxes. And then I was looking, I was like, wow, how do you have 4 of the top 10 cities? It's incredible. And I think actually that's a big advantage because people are leaving San Francisco now because of quality of life issues. And they believe they can build a company anywhere. How do you prepare the entrepreneur for Silicon Valley? They've never been there. You're taking them there to meet these firms.
You've just got to go. And that's what we tell them from the very beginning. We run an accelerator program for, as well, StartMate, which is actually the precursor to Blackbird. And that is really taking companies from the first 12 months of their life. The first thing they do is get on a plane and go to San Francisco for a week and meet with investors and successful founders. And the idea is to ramp them right up really quickly as to what global standard excellence looks like. And you just build the muscle memory from there. We surround them, to your point around the ecosystem stuff, we surround them with the successful founders in our portfolio. So it's like, here, Scott and Mike from Atlassian start mentoring Cliff and Mel from Canva. And they start mentoring Rory from Propeller.
And that's actually happened.
And this is happening.
True story,
This is this
yeah.
beautiful like circle of life thing that happens. And so in that way, the learnings get passed from one generation to another, and it compounds over time.
Let's talk a little bit about the dysfunctional nature of San Francisco right now. Do you think that this is holding us back, Ben? Or do you think it's just, what we have to deal with the limited amount of housing and the number of people who want to be there, and we'll get through it? Because it has felt particularly dysfunctional the last 2 years.
I think it links in some ways to the point you were just asking about. Does the bar go up? And the thing about being in Florence during the Renaissance is every artist wants to be in Florence during the Renaissance. I'm sure the cost of stone huts went way up in Florence during the Renaissance, and I'm sure that there was housing crisis, and I'm sure there were a lot of homeless artists sleeping on steps. I'm not sure it's a curable reality, and I think that you've got a finite amount of real estate. San Francisco suffers from something that New York suffered from a long time, this much real estate and this many people that want to live in it. Extremely expensive. It's supply and demand. You can't fix supply and demand by having government intervention, I don't think. It's a personal view. But the payback for suffering that pain is the serendipity you get from being around the best and the brightest. This is not a commercial for a move to Silicon Valley, although I would comment that there's a bunch of other sides of the coin of the government rebates and everything else. So, as an example, I'll use Canada because they have a similar tax advantage structure for engineering. I funded a phenomenal entrepreneur in Canada, and he had a really visionary idea, and it went pretty well, but it didn't make it. And from the very beginning, my biggest worry was we either hit it out of the park or we die, because there's nobody to buy him. In Silicon Valley, if you've got world quality talent, someone's going to buy your company for that talent. Those people are going to have soft landings, they're going to be given lucrative contracts, and you as an investor might actually recover your money or a portion of it. I don't have any Australian companies yet, but in the one in Canada, and I've had more than one in Canada, and there's some that are doing quite well, when it doesn't work, nobody cares, and they just give you a job. So you get a job at no better than you would have gotten otherwise, and the investors get back zero. And so having this fiercely competitive community of the very best raises up everybody's boat, and it gives more possibilities. It gives you more access. Now, I've seen great success. This is drifting sort of more backwards in the question versus the current one, but in the split teams, where it is development office in X, fill in the blank, Sydney. Okay, great. And then go to market in Y, usually San Francisco or New York in my own experience, although I'm sure there are businesses where London would be very appropriate or something else, where the CEO goes there, they're the go-to-market person, and they're just constantly out building businesses in terms of getting relationships and biggest clients. Like, where are your clients? Where do they live? Do they live here? Well, if they don't, then you need to go where they do live. And it's almost like, I think of it as there's this concept in physics of the entangled particle, where if you split the atom and it's in two different places at once, it still communicates. If you've got two really strong co-founders, that can work quite well. because the CTO co-founder that stays at home and runs the engineering team here or wherever else can be in charge of that with the vision of the company, and the person that's doing go-to-market can be somewhere like the United States going to market. The key thing, though, is you've got to have, every entrepreneur needs a northern light to succeed. You've got to have that star shining in your face every single day that you know you have to reach. You've got to have the holy land that you need to travel to. Without that, you're going to spend a lot of time in the desert, and that's a good way to die. There's a lot of wandering that can happen if you don't have a journey ahead of you. Once you have 2 offices, it's a lot harder to reinforce that vision if you don't have somebody at the helm really pushing for it relentlessly. It doesn't take a very long time for people to go off course.
You got tribes,
that question.
right? Yeah, but it is true, and it does seem like that's the high art right now is, hey, have your BD, sales, product in New York, Los Angeles, San Francisco, depending on where customers are, and then, hey, if you can run the table on talent like Vancouver, like in Vancouver and Slack has, or Yelp with their sales offices in Arizona, I believe, like they're just able to have huge success in not competing
well, you need an unfair competitive advantage. I learned this long ago. I used to go to venture capitalists to try to learn what they did because I want to introduce them to my companies. I'm very much in exactly the same role that you have going to the U.S. And I remember I took a company in and he's like, "No, I'm not going to fund it." I'm like, "Why not? It's great. It's better, faster, cheaper." And he said, "Well, we don't fund better, faster, cheaper, number one, because next year someone else will be better, faster, cheaper, and then I'm behind and I'm going to lose my money." And he said, "Two, they don't have an unfair competitive advantage." It's like, well, that would be unfair. It's like, I don't care, they have to have it. And so sometimes finding that perfect pocket, as an example, there's pockets of, as an example, the Mormon community in Salt Lake City happens to be very effective at telesales and customer service for whatever reason. So people
They're nice people.
They're incredibly nice people. And by the way, if you want to figure out how to sell, go sell God for 2 years door to door.
Oh my God, you're so right.
I can't think of much harder.
A launch festival next year in Salt Lake City. Launch Festival Sales Edition. All right, we're going to take some questions. There's the microphone. And for those of you who are here for the first time, we have a great tradition. If somebody pitches from the microphone and they use the chance to ask a question in order to promote themselves or their service, we all groan. But we need to practice the groan. So I'm going to ask everybody to give their best groan. 3, 2, groan. Oh, God. So now that we've scared the bejesus out of anybody who was thinking about going up to that microphone, I saw about 4 people skedaddle. Anybody want to ask a really high quality question? Line up right there. Stonely, I didn't ask you while we're getting some questions. Can you give everybody the sort of vision of Urban.us, why you exist and why you chose that particular vision for investing?
Sure, thanks. So we believe, that there are a number of industries that still have yet to be truly transformed by technology, and that those industries represent trillions of dollars of value as they shift and evolve. And we're already starting to see it in transportation and mobility, and we'll start seeing it soon in I think, built environment and government. And the interconnectedness of the particular sectors that we're focused on is cities. These are the things that impact how we live and work and get around cities. And the real reason why that matters to us is thinking about the future of humanity and the future of sort of legacy of our own lives, what world we're leaving behind as more and more of humanity and society is based in cities. More and more of the economy is dependent on how successful cities are, but also the condition of the planet. There's this very deep interconnectedness. I mean, it's one of the most important things we can work on getting right, this piece of technology that we call the city. And so we set out 5 years ago on a mission to upgrade cities, and there's a lot of top-down solutions being worked on, but we felt like startups were already showing a lot of meaningful impact, from Nest to Waze to Uber, Lyft, Airbnb, and at the same time creating a lot of shareholder value and returns for their investors. So,
okay, your name and a concise question.
Hi, my name is Jess. You talked about spending up to 6 months to invest in some companies. Is there any other value that you provide in that time? Mentorship, introductions, those kinds of things?
Absolutely. So in addition to building a fund over the last 5 years, we've also built an online community, sort of a distributed network of mentors, co-investors, other founders. And so when we meet someone who is doing meaningful work with founders or on cities in one of the sectors that we're interested in, we invite them to join us in a private Slack group. We have events here and there around the world, and founders that we like that maybe are too early or we want to see some more proof points, we invite them to join that community and to benefit from the connections there.
Great. Another question.
I'm much smaller than Alec, I'm afraid.
You can just bend it. Yeah, you can bend that.
Bend?
Yeah, no, you can bend it down.
Bend it like Beckham.
There you go. Perfect.
My name's Alan Timms. I came up from Melbourne yesterday. And
Welcome.
Pardon?
I said welcome.
Thank you.
Thanks for making the trip.
And primarily because this, to me, may seem to be like a holy grail. Venture capital in Australia, you're inquiring about the difference between Australia to America. You have to remember that America is a magnitude greater than Australia. You're 350 million, we're 25. Financing in this country primarily revolves around banks who have the money. They lend to people on housing, because housing is what banks like to lend money on. Banks don't like to lend money on speculative things where they might lose something. The housing markets in Australia are such that if you look at the top, say, 5 billionaires...
This is an incredible preamble. Let's cycle it down to let's land the plane here. What's the question?
Well, the question is, how can we as Australians access you people, Americans, who are here for a day, and once you've gone, you've gone? I mean, are we able to contact you to say, look, I've got an idea which may interest you. It's a worldwide concept.
Yep, great, good question.
At the end of the thing.
How do we stay in touch? Number one, jason@calacanis.com is my email. Mm-hmm. Number two, I'm at Jason on Twitter, and I'm on it all day long. I'm addicted. We do something called Launch Incubator, which we accept people from around the world. In fact, we're probably going to accept 2 or 3 companies here into the incubator. And then finally, we have something called Founder.University that we run 6 times a year that I encourage everybody to apply to, which is a 3-day course in San Francisco. It's free. And we accept 60 people, usually about 400 apply, so 1 in 6 or 7 people get in. And that's how we get to know investments down here. I'm not sure how, Ben, you're looking at it, or Stonely, how you're looking at staying in touch with these kind of markets. Do you have the email?
So I say a bunch of answers to this one. This event is an example of one exceptional event, and there are others where you come and you basically get that time. You know, I think that entrepreneurs have, I was an entrepreneur for 25 years, I believe that the minute you become an entrepreneur, you have almost a God-given right to walk up to anybody and ask them for help or tell them what you're doing. Now, so having said that, I've just opened myself up to everybody in this entire room pitching me, and that is fine.
It's your job.
It is my job. And it's interesting, not all partners truly understand that, by the way.
I know, isn't it weird? They're just like, I love these venture capitalists who are like, why, when you email me, here's how to properly email me. It's like, I'm sorry, are we in the military? Like a proper way to salute you? Like, it's like, I emailed you
I was
my
speaking
idea.
somewhere and I had to go to something immediately after, and I was really bummed out because I didn't get to hang out and hear all the pitches. And one of my friends was like, really, you like that? I'm like, well, I'm not saying I like it, but it is what I get paid to do. Having said that, I will just ask for one thing. So selling, the word no is the beginning of the selling process. The word no is the end of the fundraising process. I'm willing to listen to any pitch, but if it's not a fit, I'm going to tell you that. I love Sam's point of a fast no. My attitude is, I can't get to yes in one meeting, but I can get to no. And if I get to no, I'm not going to change my view because you say, well, actually, you're wrong about X or Y. I might be wrong about X, Y. I also built a site called pitchben.com, pitch, B-E-N, where anybody, anywhere in the world, and people from all over the world actually do, can go online and in 1 minute give me a video pitch, and I promise to give a 1 minute response. A very candid, if you can't tell already, I'm a pretty candid person, response to what I think about the pitch. Now, I will tell you that sometimes my response is, that wasn't a pitch. That was a minute of meandering around telling me that, you know, I don't know, the color purple is a really wonderful color, and I was thinking the other day that if I could take that. So, you know, don't put garbage in that. Let's not throw trash on the floor and pretend it's food. But, you know, email, LinkedIn.
He's got so many great one-liners. Is somebody writing these down?
I had somebody give me well, I won't go there, but...
We're going to have to get like a book of Ben, and it'll just be like, if you throw trash on the floor, it's not dinner. Stonely,
there was a scene I love in, I hate to go there, but what was that movie with John Travolta as a sleazy hitman? It was a great movie.
Pulp Fiction?
Pulp Fiction.
Pulp Fiction.
And
Yeah,
I won't
be
quote
careful
it.
about which scene we're talking
Yeah,
about.
I'm not going to quote the
Couple
scene,
of scenes.
but it was like, if you throw a can of garbage on my lawn, you can't pretend that you're doing me a favor. So pitchben.com, LinkedIn is okay. I try, over the transom stuff is hard. Always look for a path. This is a path. This is a path to coming up and saying, hi, I'm Ben, can I tell you what I do? But try. I will read every email. Last point I'll make, I'll read the emails that come in. Receiving an unsolicited email does not mean that I am committed to responding to it.
Yeah, sometimes there'll be a day when you get 100 or 200 or 300. It's not
I'll read
possible.
it. Get the point done in line 1. Last tip. The subject line should tell me what you do. Like in the email, if you can put it in, Uber for school buses. Okay, good to know.
So you're saying be concise, be direct, and respect the person's time. This is critical. One other thing I'll say, just since we're going to go through tips of, best practices or hacks for pitching folks, the goal is not to get an investment when you meet a person at a conference. It's for them to know who you are, what you do, say thank you, be respectful of their time, and let the next person pitch them. Well, some people seem like they're standing there in front of you. Sometimes you all have this experience. And like, well, what do you think of my idea? Will you fund it? And it's
Here's my checkbook here.
And it's like, oh my God, you have no idea how this works. Like, we don't go to a conference with checks and then just take them out and hand them around. Like, there's actually a process here. So meet the person. If they saying, would you invest in something like this? That's not the right time to say. I would say, what you'd like to say is, I was hoping to email and follow up with you and maybe just keep you informed of my progress because we're working really hard. Now, how can the investor say no? It's like, yeah, of course. And if you can't get their email, you've disqualified yourself from being an entrepreneur. What are your tips, Sam, for great ways to interact with investors in a healthy, productive way?
I don't have my own video website, but I love that.
Yeah, you can steal it.
Everybody steal, all of you.
Pitch Sam.
Pitch everybody on the planet, it'll be good.
I actually think, to abstract it out a little bit more, reverse engineer what's worked for successful founders. Go speak to them and say, tell me how you ran your process. Who are the great people you had to deal with? Who should I be pitching? The Australian VC community or investment community is pretty small. We all blog about what we're interested in. We tweet. This is what I'm looking at the moment. Clean meat, and anybody working on that, reach out. It's I think kind of problem-solving kind of
researching your
mentality.
targets. What an incredible idea.
Qualify your lead. Yeah.
Yeah, I mean, it's amazing. Sometimes we'll get an email that'll be BCC'd, and you can tell it's been pasted because Gmail makes it light purple or something, back to purple. It's like, what are we doing here? You're BCCing 100 investors, an 8-page life story? This isn't just weird. Stonely, tips, pro tips, and then things not to do, things that work, things that maybe will disqualify you even.
Yeah, I think what's important is to understand the psychology of investors and also your own psychology. In that, investors want to get as early as possible access to the best founders, and they don't want to have any pressure to invest. They want to be able to get excited and invest at their own pace. But having said that, VCs respond to FOMO and time pressure, price pressure. And so as a founder, you sort of have to create a bucket of folks that you actually do want to slow roll building a relationship, and then the folks that you would want to be part of a syndicate that you want to run a tight process, know your target, know your goal, know your timeline, and have folks run through your process. And so on this side of the table, I can appreciate when a founder approaches me from either side, where obviously the preference is that a founder, before they even have an idea, would want to build a relationship with me. Hey, I'm super talented, I've done these things, but I'm interested in these sectors that you've invested in. Can we get to know each other? How can I tap in and add value? And you can maybe help me think through my next idea.
Okay, one question, lightning and tight, go.
Hi, my name is Clive. My question is around, disclosure to investors, especially that most investors don't necessarily sign NDAs. For a startup that's asking for seed funding, how do you, and with a long product roadmap, or when is the right time to actually disclose to the investor, that this is your eventual idea, and there are many steps to get there, without necessarily giving them too much and risking your idea?
Your idea is not unique in the world. 1,000 other people have had it in all likelihood, and you probably overvalue it. And if you ask for an NDA or you're trying to protect it, you've probably disqualified yourself and you'll come across as very weird to the investment community because they do not have the time to steal your idea. There are too many opportunities out there for them to pursue than to take your idea, which is in all likelihood not going to work because most ideas don't, to then go start a company around it. You might want to very deeply look at their portfolio, and if you have a direct competitor and you're trying to kill Uber, you may not want to pitch me your solution to kill Uber. That doesn't mean I'm going to pick up the phone and call Uber and say, oh my God, you may not have thought about this, but somebody's going to pay the drivers more. Right? So this is how founders think. They're deranged sometimes, and they overvalue their ideas, or patents and this kind of stuff. Like, you haven't even built a product, you're patenting it, really? Like, I mean, maybe if you're in some medical space, but any general thoughts on this that I didn't cover?
Think maybe a different way of thinking about it is we can only make a decision on the information we have. If we have almost no information, it's going to be a no. So it's the risk you might have to take and agree with everything Jason said.
All right, let's give it up for Sam, Stonely, and Ben. Well done.